Welcome to this afternoon's webinar session, which as I can see, David has actually pressed the record button, and thank you so much for your patience and for waiting. I don't know what it is, but my machine, my new machine, does not like the GoToWebinar software. It's the third time that it's happened, all set up. I hit the start button to start the webinar and it just refuses to load. So I have to shut down, start again, and David has actually started it. And then we have to come back again. And it's all very confusing, but no matter. The one thing we're not confused about is what we are going to be covering in this session with David, who's sitting opposite me. But before we start, may I draw your attention to the disclaimer, which I know you can see on the screen. As you know, this can be a very, very risky business. So please, I beg you, do not think of using money that you cannot afford to lose. And for those of you who have been emailing and asking about these sessions, they have been a little bit erratic over the last couple of weeks, and there's been a reason for it. We've had a move, we've had to deal with some property issues. Then David got very, very ill, unfortunately. He got terrible gastric flu, and it all, one thing on top of another, and we've had to change dates. And my GoToWebinar software also broke down as well, which that didn't help, but we are back. A very regular schedule. Tuesday morning is the London session, and we start at 8:30 London time, and then Thursday we have designated these two sessions, the lunchtime session now, where we look at the Forex market, really focusing on Ninja. I have my Ninja platform up, David's got his Ninja platform up. We're not really going to look at MT5 or MT4 or Trading View. And then later on, we're going to have a break for a cup of tea, and then we're back and we're going to be looking at the indices and perhaps some commodities. We're looking at it from the perspective of day trading. Now, I know as Forex, we do day trade as well, but day trading, when you say to people, I am a day trader, it tends, the assumption is that you're going to be looking at the the indices, the ES or the YM, and the YM is the one that we tend to focus on ourselves. But to be honest, with volume price analysis, oh, here we are, David and Anna, this is our new picture, I'd forgotten about that. With volume price analysis, once you understand the methodology and you've got the quantum tools, you can really trade whatever market, either as a trader or as an investor. Now, before I carry on, let me just pass on over to David and he can say hi as well.
Thanks, darling, and hope you can hear me all loud and clear. And a very warm welcome wherever you are in the world. Good to have you here. Anna's put a thumbs up, so I guess you are hearing me, which is great. If this is the first time that you've come along to one of these sessions, a very warm welcome. And welcome to those who come along regularly. I can see we've got quite a few in the room today, so warm welcome to you as well. If you have any questions, please just drop them in the chat box. We're happy to answer them there. If you have any more detailed questions, we will answer them on air for you. And I think Anna's on NT7, I think, and I've got NinjaTrader 8, so we've got both platforms running, so you can see the indicators working on both sides of the NinjaTrader platform. I'm going to pass back to Anna, and we will get going.
I said earlier, we focus on using volume price analysis for our technical analysis of the chart to tell us what is happening, and much more importantly, what is likely to be happening next. But our approach to Forex trading, and it's something we covered in a presentation David and I did a few weeks ago to some traders over in the States, is it's only 1/3 of how we look at this market. Technical analysis, chart reading, and analysis, anticipation of what is likely to happen next is fine, and you will it's where we all start and we become proficient in it, but we soon begin to realize that this market in particular has other drivers, which include the fundamental news and also what is happening in related markets. And I suppose to related markets, you also have to add the political landscape as well. And today we've had an almost perfect example of actually with not Brexit, you'll be surprised to learn, and that is to do with the Aussie dollar, which we're going to look at later. I know David's got the chart of the Aussie yen, and what happens when you have these other factors coming into play in this market, you get volatility, and with volatility is the perfect opportunity for insiders, big operators to trap traders on the wrong side of the market. And I think he has a chart where it happened on, you know, consecutively on 3 separate occasions. So this is how we approach this market and how we approach our trading, and everything that we cover, we explain, is actually in this box set of books that is available up on Amazon. It's a box set, but it's actually digital books where we have the volume price analysis, you've got the examples, and you've got Forex for beginners, and you've got the 3D approach to Forex trading, which is what I mean by the technical, fundamental, and relational. And I'll just go back here, and in fact this is a slide for those of you who've got the education program will recognize it, where you can see the 4 capital markets: bonds, equities, commodities, and Forex sits pretty much in the center, and it kind of pulls them all together. So whatever's happening in the bond market, the equity market, commodity market, you know, you will see that reaction in the currencies and currency pairs, and will present trading opportunities. They're all very, very closely connected. And if you don't understand that, if you don't understand the importance of certain currencies play in this market, what they reflect, why they move at certain times and not at other times, you are really going to be, they're going to be lost. And what we also do in this session is we use our Forex specific indicators from quantum trading, which we've put together in what we call the currency dashboard. As we explained in the presentation we did a few weeks ago, I asked, the books came first, and then David and I were talking about, well, how can we have a graphical representation of how we interpret this market, how best to interpret this market? And the outcome of that was these 4 fantastic indicators: the CSI, the currency strength indicator over on the left, which is the first. Then we had the currency matrix, which are pairs, and the currency array to give us a sense of momentum, and finally the currency heat map, and that's what we call the currency dashboard. And that's what we will be referring to help us identify potential trades, monitor existing trades, look for entries, exits, you know, and also bring into play what is happening from a sentiment perspective. So anything you want to add to that, darling, before we move to the chart? Okay, let me just take that down quickly. Let's have a look. Should have, there we are. This is my Ninja Trader. As I said, I got Ninja 7, and in my crash something actually changed here. I'm just going to do something here with this is the pound yen, which is obviously going to be impacted by what is happening with a Brexit, but excuse me, what I also wanted to highlight today, let's just change this to 480 minutes, 365 days. Okay. What we also have to contend with as traders is the change in sentiment from the different sessions. And the best way to see this is not on the hour chart, because obviously that's a 24-hour period. If you can find an 8-hour chart, you can on MT5, there is an 8-hour chart. On a Ninja Trader you can set the parameters yourself. Just make sure you put enough data into the as I said, into the data series, so it pulls in the candles. And it's really a perfect example where you have, and also the advantage of Ninja, you've got everything in real time. This is where we are at the moment, and we're going to flop over in at 2 o'clock. So as a Forex trader, not only do you have to factor in what is happening on the chart, be aware of what is happening on the fundamental side, what's happening in related markets, what are the politics saying, how are they going to impact the markets, as it were. We had the FOMC yesterday. We've still got the outcome from the US China talks. There's been all sorts of rumors saying, oh, there's fantastic agreement. Equities have risen, indices have taken it as a positive, but until somebody comes out and says, yeah, there's been an agreement, March the 1st is still going to be the date that the tariffs are going to come into play if there hasn't been a deal agreed, a bit like Brexit for March the 29th. And what you see here in this 8-hour session, so we go back to here, this is the New York session. where obviously it started higher, then you had weakness coming in. That weakness was actually carried over into the Asia session. Then we had some late buying coming in. This is Asia, and this is the session that we're in at the moment for the pound yen. So as I said, you have to be aware that sentiment will could change 180, 180 degrees. And with New York coming up soon, traders will come on board and they say, do you know what, we're not interested in what happened 5 or 6 hours ago with that piece of fundamental news. We're really only interested in what is going to be happening in the next sort of, in the session up ahead. And as a Forex trader, if you're not aware of this potential dramatic change in sentiment, you could be opening trades at the wrong time. And of course, here what you also have to contend with in the New York session, you've got the cut with the option expires, and you also have the London fix as well. So all the more reason to have a graphical representation of what the individual currencies are doing at any given time in the session. I've just got the 2-minute chart up here. Let's have a look. Let's bring it up to 10-minute. As we come up, we can see here the pound has been buying. The yen is kind of trying to fall, but there's still strong buying of the pound, but not necessarily as strong perhaps in the Aussie dollar. And I'm going to explain about the Aussie dollar a little bit later. Once, as I said, we'll have a look at David's chart, because I know he's got the Aussie yen from the technical picture for the Aussie yen, and I'll give you a little bit of background of why that is the case, as I said, for the Aussie yen. Is there anything else you want to say to that, David?
Just switching screens over to my side, which should be coming up any second now. Hopefully you can see them. Have they come up, darling? Yep.
I've got nothing up. I've got a black screen. A black screen.
No way. Seriously?
Yeah.
Hold on one moment. Bear with us a moment. Just double check. Could someone just let me know if they can actually see my screen, which should look like 6 different time frames, 3 across the top, 3 across the bottom, if you wouldn't mind. Thanks, Lisa. Fine.
Can you see it?
Yeah.
Oh, it's just me. Oh, it's me.
It's just Anna. I think it's Anna's GTW. Okay.
Yeah. Fine. Can they see your screen?
Hopefully you can all see my screen.
Except me.
Except for Anna, but never mind. She can move around the other side of the desk. I just wanted to start with some nice trades which have been going on, and also some examples of VPN action, and also, as Anna mentioned at the start, in terms of the volatility also. This is the dollar CAD. The reason I pulled this up is because we've had a nice trending move on the dollar CAD through the latter part of the morning at any rate. And across the top of the screen, you've got the 5-minute, the 10-minute, the 15-minute. And down at the bottom, we've got 30. We've got the Renko in the middle. And over here, we've got the daily, just to give us context. There's several aspects of this. First of all, using multiple time frames, you can see the trend monitor here. It's red throughout. It's red on 10. It's red on 15. And it's transitioned to red on 30 as well. So it's giving you that all-important help in holding through those portions of the trend where the trend has moved into consolidation, maybe had a minor reversal as here, and then we continue downwards in the original direction of the trend. It's so important just managing the emotion when the market moves into these phases of price action, where you've got this region, you've maybe already taken a position in the market, it starts to reverse, maybe you've seen some profit drain away, and you become nervous and you maybe close out too early. And that's always the risk, that is the danger, and that's what the trend monitor has been designed to do. So it's using it as a mechanism to help to calm that emotion, if you will, and keep you in through the trade. The other reason I wanted to highlight this is because we're actually coming to a potential reversal point, and you're starting to see that really reflected in various time frames. If I just pull up the 10-minute, for example, we're seeing rising volume through this phase of price action, but then we start to see a deep wick to the lower side of this candle, and we've got an increase in volume. Now, bear in mind also that we're coming up to the 1 o'clock session, so two things. We've got the 1 o'clock crossover as a potential reversal opportunity, And secondly, we've also got to be aware of the fact that we've got news coming up in 20 odd minutes. So the expectation is that there is the possibility of reversal, but we've also got the news to contend with, so we're possibly expecting some congestion in this region anyway as a result of waiting for the news release ahead of it. But you're also seeing that over on 5, similar sort of VPA. We've got falling price, rising volume, but then on this candle we start to see an anomaly. This candle is fine, we've got nice volume, we've got decent price spread and no wicks to top and bottom, or very little. As we move deeper into the move, then we get the buying coming in under this candle, reinforced again with a hammer here. This has closed marginally higher on the from the open, but it doesn't matter. Nevertheless, we've got another anomaly in the sense of volume coming in and a potential reversal in sentiment reflected as a result with that buying coming into the market. Similar sort of situation over on 15. Perhaps not so pronounced, but nevertheless, we've got a lot of volume coming in here. We've got a deep wick. The price is closed halfway out the candle. In addition to that, we've got further reinforcement of the fact of, excuse me, I'm just going to switch off for a moment. It's okay, darling. In addition to that, we've got a couple of other factors. We've got the fact that we are sitting and now approaching the volume point of control, this dashed yellow line, which signals the highest concentration of volume on this particular time horizon for this particular pair. And the anticipation of that is that we expect to see the market at the very least congest because we've got a lot of volume, and this is a region where the market is likely to congest because it's at the fulcrum point at which we're reaching a point where price agreement has been reached before and therefore likely to be reached again as the market approaches. Secondly, we've also got a very strong, this dash blue line on the accumulation distribution. This is looking at support and resistance from the traditional perspective of price. It's where price has been tested or retested and creating those strong areas of resistance or support. In this case, we've got a potential platform here on this very wide blue line. The wider the line, then the deeper is that potential area of support and resistance. So there's a couple of signals again, and again it's another reason for using multiple timeframes because it gives you that heads up in other timeframes of reasons that a market has maybe stalled in a faster time frame or vice versa in a slower time frame. So it's giving you all that information. So that's on the dollar CAD. If we head over onto the CSI, where are we? Here we go. Let's just pull those up. Let's just see where we are. Yep. This is on the 5-minute CSI. You can see here this dark purple line, which is the Canadian dollar. It's reached overbought and it's just starting to roll over. So it's giving us a potential opportunity for taking a reversal trade. Whether you'd want to take that right now, that's entirely a personal decision. And it's also based on the fact that we've got a news release coming up in 15 minutes time. And later on in the session, I think the Bank of Canada chairman is also speaking later on. I think it's around 5 o'clock in the evening, certainly our time anyway. So Plotz is he's going to have Polos is going to have a few words to say. So no doubt that will affect the Canadian dollar as well. But for the time being, it's all about fundamental news in 15 minutes or so. And if it's US related, then it will impact the Canadian dollar because Canadian exports represent something like 80% of the US market for them. So the Canadian dollar is setting up for a potential reversal. It doesn't mean it's automatically going to roll over nicely for us, but getting into reversal trade means you get in early, you maximize profits from the trend. Down at the other end of the spectrum, we've got the US dollar here, which is the red line. Never got down into oversold, but nevertheless, it's flatlining along here and could well reverse and set up the other side of the equation for the reversal position. If we move up to the 15-minute, this is the 15-minute time frame. Similar sort of picture. The Canadian here is moving up into overbought. It hasn't started to roll yet. You don't expect it to because everything happens from the fastest time frame outwards down to the slower time frames. That's just the way it happens. Everything starts with a 1-minute or a 30-second chart, whatever it may be, And then if that trend is developing, it will develop across the time frame. So it'll move to 2, to 3, to 5, to 10, to 15, and so on outwards. It's the ripples in the pond analogy, which I've used many times before. In terms of the dollar, a little less clear cut. If I was going to take a reversal position on that particular one, then ideally I'd be looking for this to be down here somewhere. That's not to say this isn't going to kick up, particularly as we've got fundamental news coming along shortly. But from a straight reversal trading perspective, what I'd be looking for all the time is I'm looking for something that's quite strongly overbought and something else that's quite strongly oversold. So, I'm not seeing that at the moment. Nevertheless, we're starting to see that potential develop on the charts themselves. Let me just answer Lisa's question. What did you show? The indicates the signal to relax and not close too early in chart 2. Yes, exactly. What the trend monitor was developed for was there are two sister indicators. The trend dots. I'll go back to the chart. Let me go back to the time frame chart. Just flick back onto the multiple time frame charts. There we go. Let's move that out of the way. I've got the trend dots down here. I've actually got them on the Renko, just for clarity. The trend dots work very close to the price action in changes in trend. As you can see here, they do change very quickly to, I've got a transitional here in grey, from blue to grey to red, and then back to blue again. So they change very quickly, but they give you an instant sense of changes in sentiment of pause points coming along in terms of the price action. So they work very close to the price action. The sister indicator to the trends indicator is the trend monitor. And what the trend monitor does is it's very much a smoothing indicator. So when you get these points here, for example, where the market has paused, it's maybe moved a little bit higher, it's moving against you, the trend monitor takes a more considered view of that trend and therefore helps to keep you in. It helps to calm that emotion. And all of that is really reinforced with the fact that you're using multiple timeframes, because what you will see across the time frame, as I said before, you'll see in this occasion or in this example, you've got a 5-minute here. So everything will be coming up from the 5-minute. So the first change will occur on the 5-minute. And if that's a longer term change in a trend, then it'll ripple through to the 10 and onto the 15 and out to the 30 and so on and so forth. And ultimately, of course, right the way out to the daily. Oops, sorry. Where's that gone, my daily? Just lost the daily chart. There we go. Just move the chat box out of the way from it. There we go. And ultimately, as I say, it goes right the way out to the daily. And as you can see, we've transitioned. We have this trend run higher. We've gone back to the VPOT. We've got a very heavy area of price resistance, which is acting as a ceiling here. The market's moved to it. It's tested it several times. Can't breach it. It's rolled over again, gone through the volume point of control. And the trend monitor's now transitioned through to transitional color. And we've now gone back through to bright red in terms of bearish sentiment for this particular pair. But as you can see, we're congesting at the moment, and that's largely because we're waiting for the fundamental news, which is now due in 10 minutes. Just to give you a heads up on a couple of other things as well, let's just go to euro dollar for a moment. And I've got all these links, so that's all changed automatically, as you can see. This was just another nice example of VPA in action. This was from quite an extended period from this morning. We had the volatility triggered, and I've got an example. I'm just moved to the Aussie yen thereafter after this one. We've had volatility triggered. The anticipation is that the market makers are participating. They're in here. We know that for a fact. There's selling going on in the top of the candle, and the market congests and in this case rolls over. It doesn't continue higher. So the expectation, the anticipation of the volatility is that at the very least you're going to see congestion and worst case a complete reversal, which is what occurred here. We then move into the downside trend. Trend monitor, you can see transitions. Then we see some buying coming in and the reversal takes place. And really what I wanted to show you in this example is that as the bearish sentiment, the bullish sentiment takes hold, the power of volume price analysis, or certainly one of the applications of volume price analysis, is when we move from what we call here a primary trend, this is a secondary, and back into the primary. we're rotating around the volume point of control now, which is no surprise because we've got congestion and we've got news. But the power of volume price analysis really comes to its own when you see this. For example, we've got 2 down candles, but look at the volume. The volume is falling away. And what does that tell you? It tells you that on the balance of probabilities, that this trend, if we call it a trend at that point, because at this point we wouldn't know what was going on thereafter, we would just see this bit of it. What it's telling you is that this is probably just a secondary. In other words, the primary trend is likely to be re-established. And the reason for that is because volume is falling. And if you've got falling prices and falling volume, that is weak. It's exactly the same scenario as if you've got rising prices and falling volume. If a market's going to fall and fall fast, it has to have rising volume, not falling volume. And therefore, if you see that in a downtrend, when you've had a strong uptrend and you see the market pause and reverse, as in this example, and you see this configuration of volume and it's falling away, that is telling you one thing and one thing only, that the volume, that the selling pressure is falling away and it's an anomaly, and therefore this is more likely to be a secondary trend rather than an establishment of a primary bearish trend. In other words, from primary bullish to primary bearish. And once again, you can see the trend monitor here. It changed into these transitional colors, but it never actually went to bright red. It went dark blue, dark red, then back to dark blue again as the trend picked up again. And that's the sort of confidence builder. It just helps you with the volume price analysis detail. It just helps you fill in the gaps and calm the emotion and just stop worrying that you're going to see your profit drift away and you're going to lose everything that you've gained in this nice piece of trend high here. And then, of course, to reinforce that, the other reason I wanted to pull this example out is it just gives you a nice example of what I was talking about just now, which is rising volume and rising price. It's just a really nice example. It's what you want to see. So volume is confirming price and vice versa, and it's just restating that the primary trend has been re-established with some nice volume pushing it higher. And the only reason we're now congesting is because we've got news coming along. And at this point, as we rotate around the volume point of control, then we have to be patient. Given that we've got news, if we've taken a fair chunk of this out of the market, then it's probably an optimal time either to close out completely, or if we've built a position in the market, perhaps to scale out some of that and just leave some of it on the table and close out some of the profits on the expectation of the news. Just head over to the Aussie yen. Let's just see what's going on there. Let's just, where were we? I think we were on the 10-minute here. Yeah, this was, or certainly some examples this morning. We've had a lot of volatility, and certainly overnight, maybe it was the 15, I think, as well. Similar sort of picture. There we go. Yeah, on the 15. And this is the volatility indicator, and it really is just so powerful. It's not perfect. Nothing in trading is, but when you see volatility in the market, then it's a warning signal. The beauty of the indicator is it appears in real time. In other words, you don't have to wait for the candle to close. It will appear top and bottom as the price action moves outside the average true range. Once it does, it's a signal that the fact that A, we've got volatility, and B, the market makers will be playing in that market because they have reason to be. And on this occasion, it was news. It was all to do with coal. It was also some fundamental data in here as well. The market moves rapidly. The emotion for traders is jump in, fear of missing out, jumped in, trapped, bang, it reverses. Then there's another one, this time to the downside, reverses, pressure, pressure, pressure. It's not reversing the trend from bearish to bullish, but it's certainly creating pressure through the pressure of time of sitting here, taking a short position somewhere in here, and now stressing about the fact that perhaps we've got it wrong. Probably a lot of traders would have closed out because they now feel that they're on the wrong side of the market. The next one comes along, bang, repeat performance. Then we get one to the upside again. Again, it's a repeat performance back inside the spread of the candle, and pressure, pressure, pressure. We've been trading there ever since. That's what volatility is about. That's what the fear of missing out is about. And that's what the indicator does for you. If you're in a position, you've got one in the market and you're profitable, I would say close out 9 times out of 10. Just take it out of the market and wait to see what happens. If it's confirmed, in this example, suppose it rushes up to the upside, you may well get a brief pause and then continuation. That's fine. Once it's cleared this region, that's perfectly fine to jump back in again. It's all a question of how much risk, what you're comfortable with, whether you want to sit through these, whether you want to hold positions through them. Personally, I don't. If I see this and I've got a profitable position, I'll close it out almost always. The flip side of that is if you've got a losing position and this makes the position worse, it's a harder decision, but nevertheless probably one that you should close out because the chances are that it won't recover. But that's a personal decision. Let me pass back to Anna and just change screens. Bear with us a moment.
Okay, I know David can see my screen, and I'm sure, I'm pretty certain all you can as well. I put the dollar Canadian up because, as I said, we have a whole raft of US data coming up, and apparently I was just looking on Forex Factory and Forex Live. It was because everything's been delayed. Obviously, the government shut down in the US. Here it is, the core durable goods. Here you can see that's what we're waiting for, and those of you who are on the program will know that one of the resources we recommend for getting to know your currency and the country that obviously it represents is this one here, which is the WITS World Bank. And what it does is it just breaks down the major imports and export for each individual currency. Now, a country. I appreciate it's only 2017, but it's really good enough to give you an idea of why what the relationships are between different economies. And we said about Australia, and we can see here almost 30% of the Australian exports go to China, and the reason Australia, the Aussie dollar today, overnight we had it went up because it had very good employment numbers, and then it had a complete swoon, and the reason was that China has banned the import of Australian coal, and in that 29% there, you can actually go in and look at what the actual products are, and it's very, very high. I mean, the Australian mining industry is hugely dependent on China. Now, there's all sorts of reasons why China has suddenly banned the import of Australian coal. There's a political reason. It's to do with all this background spat that's going on about, how do you pronounce it? Huawei, isn't it? The 5G? So she was arrested in Canada. There's all that bubbling on in the background, and it seems to be maybe some kind of a retaliation for that. We say, well, why? The Chinese are very dependent on coal. All their power stations are dependent on coal. Why would they cut their noses off to spite their faces? Particularly, as I understand, Australian coal has a very low sulfur content, so it makes if you're going to burn a fossil fuel, then you burn one that is most environmentally friendly. So there's a lot going on in the background, and this site is just perfect for getting this kind of information. So when you read suddenly that the Aussie dollar has fallen because of issues with China, you go in to look at Australia and you think, oh, now I can understand why. And if you want to go through all the different countries, it's quite interesting to see who imports what's from whom and who exports what. And Germany to the UK is very interesting. The UK, where the UK export market is, and it isn't actually in Europe. It's the US. So, you know, it has all sorts of ramifications from political perspective, how the fundamental news is going to be interpreted as well. So, as I said, this is a very complex market. On the surface, it seems very simple because all you're being asked to make a decision on is whether something is going to go up or going to go down. But behind that decision lies a huge amount of complexity. And as David said, this is Canada. You said 80, almost 80%, didn't you? Yeah, you were bang on. Yeah, 75, and you can see. So when we had all this NAFTA business going on, you can understand why the Canadians were getting very, very nervous as to what Donald may or may not have been up to. Okay, fantastic site. We thoroughly recommend it. We recommend it in the Forex program. You know, really get to know your currencies because it kind of puts some flesh on the bones of what you see happening on your chart. So let me just bring that down. Oh, here we are. Right, we've obviously had the news. Let me go and see. Interesting. Wrong one.
Positive for Canada.
Watching see my wardrobe. Let's have a look. Forex Factory is a bit slow with news.
It's positive for Canada and negative for the dollar.
Oh, right. Oh, well, mine hasn't even come up yet here. Let's go to Forex Live, see what the guys say. Right. Oh, the Philly Fed's coming up as well. Minus. Oh my goodness. Well, that always is a bit of a shocker, isn't it? Kind of. The Fed are kind of playing a kind of, well, you know, things aren't too bad, but it's all a bit neutral, and we'll wait and see what happens with the data to see whether we're going to carry on raising interest rates, or maybe, you know, maybe there's a cut down the line. Who knows? Actually, what's the most important element of the Fed FOMC yesterday was the what they call QT, which is the reduction in the Federal Reserve balance sheet, which also was going to have an effect of the amount of dollars that are going to be in circulation. Right, here we are. Where are the core durable goods?
I'll tell you.
Well, how come they're not here? Let's have a look.
0.1 against 0.3.
There we are. Well, mine hasn't even come out yet. And they're supposed to be -4 last time. 1.2. That's positive. Goods orders. I think everything's is delayed at the moment. Right. What's happening from a trading perspective? I've got the dollar CAD here at the moment. I've got the. In fact, I've got the CAD falling on the. On the CSI, but I've also got the dollar falling. So if you like, it's a case of, yes, they are both going in the same direction. Let's have a look at the 3-minute chart. This is what we would expect to see ahead of a news release, where we have congestion, the market pausing, waiting for the news, and then we have the reaction. Now, we've actually had a volatility candle triggered on the 3-minute. We've got the little purple triangles to the top and the bottom. The price has retreated to within of that of the candle, but it hasn't closed off yet. So we'll see if that's going to carry on through, or whether in fact that is going to in fact go into congestion, into the spread, and possibly back down to test the volume point of control here at 131.68. So let's have a look how that was reflected on my Renko. This was the fall. This is the volatility higher. What have I got here? Let me see. The optimizer works slightly different on Renko, but slightly different with Ninja as to MT45. You select a time frame. So I've got 3 minutes, and it tells you what is the optimum brick size. So you press that, and it automatically loads it. What I've also done is I've created a template to give me fatter charts, fatter candles, because I don't like the skinny candles, and I can't. So I've just got a Renko template. There we are. And that updates it, and we can see here, this is reflecting what we can see on the 3-minute chart. Let's have a look. What we have, not really doing very much at the moment. Looks like we've got to be a little bit patient on this one. Let's see the dollar index that I have here. I've just got it on 3 minutes. That was the initial knee-jerk reaction. What have we got on the CSI here? Well, we've certainly got the sell-off of the dollar, but it's not actually reflected, as we can see here, against the US dollar so much because they're both going in the same direction. It looks like, I would say, probably the CAD yen. David, have you got that one up at the moment? So David's got that one. So if do you want to move over back to you, or do you want me to bring it up here? I'm going to keep an eye on the dollar Canadian, and we will see.
Yeah, you can come over here.
Yeah, I'll move over to you. Yeah. Might be able to see your screen. You never know.
We'll try.
Yeah, come up.
Anna can actually see it. Hurrah! Hopefully
Fantastic.
you can all do. Have you switched off, darling? Are you off?
I have now.
Okay. Just move the chat box out of the way. This is the reaction. A lot of volume coming in, and again we've got the volatility. And as you can see, we've got the volatility top and bottom, and the expectation, the anticipation is that at the very least we expect to see the market congest inside that price action, possibly reverse, but generally speaking we see it congest because it's then time that is the emotional thumbscrew, if you will, to emotion for traders, because you can imagine as the market drops like this, it's so easy to look at it, and because the screen, and even more so if you were trading on a Renko or you were trading on a tick chart, for example, you would see that speed equate in terms of momentum on the chart physically, because if you're using a non-time based chart, and that's the reason traders use them, it's because it reveals momentum. This doesn't, it just removes all a time-based chart reveals in terms of momentum and speed is that the spread of the price candle is wide. All volatility is just a compression of time, no more, no less, because this price action should have taken place over, let's say, 4 or 5 candles, for example, should have been over this sort of period. It hasn't, it's been compressed, and that's all volatility is. It's just a compression of time where price action is delivered. The equivalent price action that you would expect to be spread over a longer period is just compressed into this very tiny period of the chart, and it's associated with high volume. So you know this is the market makers, they're involved in this move. This is not a trap move, this is a genuine move. They're in here, they're going to be buying, they're going to be trapping, all sorts of things going on. And the expectation is, you can imagine as this market moves very quickly lower, the natural reaction, and we all suffer it, let's face it, you see that move quickly and you want to jump in and take a position in the market because you think it's a nice quick way to make a profit. And it's the absolute reverse. It's the quickest way to get trapped into a weak position and make a loss. You just have to sit on your hands, let it go, and wait for the market to calm. You know why it's happened, because it's news. Sometimes these things come out of the blue. They'll come for reasons that you have no idea about. So particularly, I can remember many occasions on a Friday night, for example, where you get name's gone. What do they call the authority bodies for setting the rating agencies? Thanks, darling. The rating agencies, they will release stuff on a Friday night, often after the exchanges have closed, and you'll get extreme volatility. Suddenly comes out of nowhere, and you think, where the hell did that come from? It's like the flash crash that happened a few weeks ago. We were sitting here, I think it was 9, 10 o'clock at night, bang, the market just is extreme. It happens, you know, and it's when you see those moves, you have to almost look at the market upside down, in the sense that you've got to look at the opportunity to the opposite side of the travel of direction. So if the market is falling out of bed, you have to be brave and look for those opportunities for the market to reverse. The flash crash was a classic. It absolutely fell out of bed on virtually no volume. It was totally obvious that it was going to reverse. You just had to be brave and step in and take a reversal position. Yes, it was volatile, but boy, it paid handsomely in dividends. And it's the same when this occurs. You see the market moving quickly. Your reaction is to join and jump in, and you have to think of the reverse all the time and actually not be drawn in and just look for the opportunities to trade in the opposite direction. I can assure you there'll be traders in here now trading the reverse. If you were looking at the 1 minute, in fact, let's step this down to the 1 minute. There we go. It's carried on through in this occasion, carried on down. Now we're starting to see the reversal coming, and there'll be traders trading that. We've got a bullish engulfing on that candle. Looking up the chart, what have we got? We've got some light price resistance overhead here, pretty thin volume here, deeper volume as we move up. That's what traders will be looking for. The trend monitor, as you can see, hasn't transitioned yet, but it probably will do on the next candle, the one thereafter. And then if that is going to transition through into a slower time frame reversal, then obviously you will see that transition through. I mean, if we put this down to, let's change this to 2 minute, for example. There we go, you're starting to see it there. And if we change this down to 3, there we go. You've got the volatility. You've seen some buying coming in on 3. You are trading around the volume point of control. You can see it here, you can see it here. So if you were looking at this for a reversal opportunity, you'd be doing it with a certain degree of caution, because unless it moves away strongly from this volume point of control, then one would normally expect the market to congest around that region for a little while, because that is the heaviest area of concentration of volume. If it does move away, then it's got to move away strongly with volume. So in terms of taking a position for, when I say the longer term, I'm talking in terms of minutes now, as an intraday scalping trader, then that's a high risk proposition, because as you can see, the market is the strength is not there, and we're seeing congestion building around the volume point of control on 2 and also on 3, which is what we expect. We've got weakness come in here. If you look at that volume under that that effort to rise, the volume's okay, but then we've got an effort to rally. We've got a wick to the upper body, decent volume under that, so it's not looking terribly strong. Trend monitor transition through to red on that time frame. Let me pass back to Anna, and we will wrap up, because we've been running over time a little bit. I know we're a little bit late starting. Let me pass back to Anna though. Back. Yes, I can see it.
Okay, going back to what we were looking at on the 3 minute chart here for the dollar Canadian. Exactly as we said, volatility, price kind of, as you can see, it didn't clear it. Went back into the spread. It looked as though it was going to shoot up, and you think, oh well, maybe we're wrong about the volatility candle, but I tell you, is it 8 times out of 10, David? Do you reckon 80%? Yeah, David reckons it's 8 or 9 out of 10. This is what happens, and it's the fear of missing out again. It's this fear that you think, oh, even if the general rule that when you see volatility triggered, that's outside of the average true range, and you see the candle going up, you think, oh well, maybe this is the one time it isn't going to happen, and blow me down, it goes straight back in. And here we are, we're coming back down again. Not with any degree of speed, as it were, but at least it's a confirmation of what you can expect most of the time when you have the volatility triggered. And we have a great example over here as well, where we had it on the down candle, where the price went back in, rose back up, and then you say, well, how do you, what do you do then? What do you wait? And I think I said it was it one of the sessions last week, where we were looking at the pound yen in the London session, and we had volatility all over the place, as you have with the pound at the moment. And well, what you have to do is you have to wait until it clears either the high or the low of the candle, and this is where being patient. This is only the 3 minute chart, so if you look at the trigger on here and you count the number of candles before it actually broke that low, it's just a 3 minute chart. So we have the volatility, then it goes, you've got 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16, got 17 candles. What's 17 times 3, David? 27 3s 51. How many minutes is that?
Almost an hour.
It's almost an hour. And this is the 3 minute chart, but You really do, and patience is really not what we're, it's a virtue that.
It's also a nice example of the trend dots and the trend monitor.
I'll do that. I'll move over to you as well. So as David's made the point as well. I mean, we're focusing on looking at the CSI and the currency, the Forex specific tools from that we've developed via quantum trading. But it's also helped, as you can see here, with the trend dots. The trend dots change first. We've got the blue, then the grey, then we have a little bit of blue. That stays still red. You have the transition colour, but it never goes into deep blue. You have this dark blue, which is another signal that possibly this is not going to, not going to go much further. And you have a candle with a wick to the top of the candle, so you obviously have weakness. If you look at the volume profiles underneath these candles, really nothing much to write home about. And when you get these piano keys where they go up and then down and then up and then down, it really is a lack of direction as well. And as I said, look to the left of the chart. You can see the volatility candle having triggered. You know what you're waiting to see, what to happen if you were looking to rejoin the primary. This was a primary trend lower. This was only a secondary pullback, if you like. Wait until that clears there. The trend monitor goes back red. The trend dots go back red. And in fact, they've been red until you get to the volume point of control, which is, again, it's one of the indicators it's going to be pausing there, and that was ahead of the news. It's really, I wouldn't say it's not simple, it's not easy, but if you understand what you're seeing in terms of the price cycle, and most particularly, what is the reaction that you are going to see in the price action following a bout of volatility, that will help you. It will help you spot a potential trade. If you'd missed all that, you see this triggered and you think, okay, well, I'll hang on a bit and I'll see what happens. And of course, you'll be seeing it in conjunction with what you are seeing on the CSI as well. But when you see price rotating around the VPOC, it will also tell you, it gives you another bit of information to tell you that, it's going to take a little bit of time before it decides if in fact it's going to go back up or it's going to carry on lower. And we have our levels. The levels are here. They're given to us. The lows of the candle. You've got levels that are given from the various indicators. You've got levels from the accumulation and distribution, and you've got the levels also from the VPOC itself. As you can see here, we've got prices trying to rise. In fact, this has gone to bright blue, which is quite interesting. The dots are bright blue as well, so it may just be, but patience. We really do have to wait until it has to clear the top of that candle. And on this occasion, I would also say, given the depth of the wick of this candle, I would say probably you've really got to wait until it clears this this little minor shooting star. Over here, this little candle was only a narrow spread with a little wick to the bottom, but this is quite there's a few pips to clear before it's going to carry. We're going to get a reversal, if you like, from this primary trend lower. And if we look at the Renko that I've got here, yeah, it just confirms the picture. You've got the VPOC here. You've got to have some clear, some clearance from these congestion zones to be able to say with a degree of confidence that it is going to carry on higher. And what are we seeing here on the CSI? Well, we've got the dollar reaching an oversold. Is that going to turn up? Sometimes it can, and it can carry on lower. And we've got the Canadian. Yeah, it's let's see what is happening on. Again, just patience. They are pretty much going in the same direction, confirming that it's still basically in congestion. Anything else you want to say, David, or is that it? Brilliant. Okay, fine. Thank you. That's what I wanted to say on that one. Let me just go back to here. Where am I here? I'm getting used to this new format, which is thoroughly confusing. Very, very quickly. As I said, this is where we were. We've only just looked at the currency strength indicator. Next time we'll have a look at the pairs through the matrix, the array, and also the heat map. For those of you who have come along for the first time, let me just go back there and we can see this. Here we are. With regard to the indicators that we have been looking at, they are from quantum trading. The dashboard, the suite of indicators for the dashboard, individually they come to 770, but the bundle price is 497, and they really give you all the technical information that you need as a Forex trader, but more importantly, they also help you to identify the sentiment of the market towards the individual currencies and the currency pairs: overbought, oversold, strength, weakness, as I said, sentiment, and global risk. And you can find all the details at quantumtrading.com. This is the screenshot from the front page of the site. As you can see here, these are the Ninja Trader ones. We also have indicators for Trading View. We have a lot of customers who buy traders indicators for one of the major platforms, Ninja and MetaTrader, and then they like to supplement that with something from Trading View. It's only the CSI is available on Trading View because of the way the data is delivered. But if you buy an indicator or the bundle and you want to buy another indicator, maybe for another platform, or a second indicator because you want to use it on another account, as it were, you do get a 50% discount. But as I said, just drop us a line. You can drop me a line, Anna at annacooling.com, David at quantumtrading.com, and we can explain that further for you. As I say here, you buy a bundle or a complete package, you get 24/7 support, and all upgrades are free. If you invest in the complete package, you do receive all future indicators for free. Not the currency dashboard, that is the complete package, and they're all covered by the 7-day money-back guarantee. Everything we've said, we've explained, is all contained in our complete Forex trading program. I know we have some of our students come along to these sessions, and it's lovely to have you join us, asking questions, and just seeing how you are all getting on, which is great. This is the program, the complete Forex trading program, 5 modules: the psychology, fundamental, relational, technical, and the mechanics of trading. And this actually includes the full package of quantum trading indicators. Anything else you want to add, David? As I said, but if you want more information, just simply drop me a line, David at quantumtrading.com, or myself, Anna at annacooling.com, and you can catch up with my analysis and read about all the different books at annacooling.com. We're going to go off and have a cup of tea. We are back at 3:15. Yep, feed the dogs, have a cup of tea, have a look at the indices, see what's going on with the market. There's all sorts of things going on in background, and I think the indices are going to be very, very interesting given what's been going on, as I said, with the Fed, and more importantly with the China-US trade talks. So if we don't catch you in an hour or so, we will catch you next time, either at London, Tuesday, 8:30 our time, or we'll be back at this same time next week. So thank you so much for coming along, and have a great day's trading. Take care. Bye.